Hello, hello, and namaste. So I'm Vishal, and I'm here to giving a presentation on the topic of navigating the next year, analyzing bond price, interest, and first and investment strategies. So this is my topic, including in bond price, interest, and so another one is um, introduction of bond introduction of a bond. So let me introduce something about the bond. So it is in presentation. We will explore the complex relationship between the bond price and interest. So effective investment and strategy understanding with dynamic and crucial for the market and inform the investment decision in the today's of versatile financial landscape. So so we will compare the two bonds and analyze the impact interest rate and investment strategy of anticipated of the economic growth. Hmm. So in the understanding the bond prices of the bond are influenced by the various factors, including the interest rate, credit quality, and market demand. And where the interest rate and rise, bond price typically fall on the vice versa, and this force of relationship is fundamental to the bond market and dynamics. So bond A and bond B price comparisons. Uh, let's start comparing the bond A and bond B. Both bonds have the same credit rating per par value and coupon rate. So key difference between the maturity bond A and 30 years of maturity, while the bond B has a 5 years of primary determinant of a bond price sensitivity to the interest rate and change its duration. The longer time bond, like a bond A, have a higher duration compared to the shorter term bond like a bond B. And this means the bond A will be the most sensitive and interest rate changes. So we have understanding some key points of understanding the bond prices, and so what will be the interest rates, the impact of interest rates. So interest rates are the key driver of economic activity and influence the borrowing cost, and they are set by the central banks and affect the bonds. Why the changes of rates and bonds prices is essential for the investor. So now let's explore. So what happens when the interest rate increases, when the interest rate rises and the bond prices fall, because the fixed coupons payment will become the less attractive and compared to the new bond issue with the higher uh, so types of bonds. There are the different types of bonds like government, corporate, and municipal bonds. Each type of bonds can be owned, risks, and return to the profile, making it crucial investor to choose wisely based on their investment goal. So less in this impact of interest rate changes and the types of bonds. So assume the bonds have a par value of $1,000 and coupon rate of 5%. Current market interest rate is 4%. So while this assumption, the price of bond A, which has 30 years of maturity, is approximately a dollar of 1148. The price of bond B with the 5 years of maturity, which is cannot be described with mathematical terms to the presentation, but I can summarize this somehow. So the pricing mechanisms, the bond pricing is determined by the present value of the future cash flow, which include the interest payment and the principal repayment, and mechanisms is sensitive into change the interest rate and statistical uh, the overall investment strategy. So price change, if the market raises the 6% of the new price of bond A will be dropped approximately of the 88 $8,844, and new price bond of B will be dropped approximately the dollar of 929. This demonstrates the longer term of bond experience of larger price. The drop will be interest rate. So investment strategy and overview. So investment strategy overview. So bond will be calculated through the mathematical. So if we expect slowdown the economic over the 12 month of interest rate are likely decrease central bank adapt simulated. So successful investment in bond requires well-defined strategy and common approaches, will include buy and hold laddering and active trading. Each strategy has its own advantage and risks depending on the market condition. So while we expect the slowdown of 12 months of central banks, I know, in such of scenario, investing a longer term in the bond like bond A will be the beneficial because the price will be rise more significantly where the interest rate will fall accident. Additionally, focusing on the high quality of bonds. So short and long term bonds can provide balance between the L and VIX. So, and another topic is analyzing the market trends. So, investors should inform about the market trends and economic indicators that influence the interest. So, in the tool of crisis, so we have to invest on the bond and the like share. So, it will like while in Nepalese context, there is also in the COVID period, the share market has risen up with the like exponential growth in the COVID time. The tools will be technical analysis and the economic reports can aids make informed decision and regarding the bond investment. So risk management bond. The managing risks of bond investment is the understand the credit risk and interest rate and risk and implementation of risk and dissatisfaction and strategic assets. So which acquisition can help to mitigate their risks and enhance the over portfolio performance in the risk management. So we should have to manage the risks also in the like a bond. The current economic environment. The current economic environment is characterized by the uh, calculating the interest rate and inflation concern. These factors make it crucial in shaping the bond prices and investment strategy requires the investor to adapt quickly. The future outlook for bond. Looking ahead of investors should consider the potential economic shift from their business to the bond investment and their impact of interest rates and the bond prices. Staying informed and flexible will be key to navigating the evolving bond and land market landscapes. Though there are the major key takeaways and before the wrap up, starting summary, the understanding the relationship between the bond prices and the interest rates are the virtual for effective investment strategies. Continuous monitoring the market condition and economic indicator will enhance the investment outcomes. So, in conclusion, understanding the interplay between the bond price, interest rate, and economic conditions is crucial for effective bond investment. While the short-term bonds are less impacted by the rising interest rate, and the longer term of the bond will be the greater price potential for slowdown. A well-rounded strategy involves assessing the division between credit quality and economic growth. So here are an isthmus for bond and interest and other things. And the another one is the references, and I will keep this video on the link of the last page. And thank you.